Welcome to Smart Stock Watch. Today is May 8th, 2025, and we're diving into Kenvue's first quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Kenvue, the world's largest pure-play consumer health company, has just released its Q1 2025 results. It's an interesting report, especially given the current economic climate.
Revenue and profitability overview. Let's start with the top line. Kenvue reported net sales of $3.741 billion, a 3.9% decrease compared to last year. John, what are the key factors behind this decline?
The decline in net sales is primarily due to a 1.2% drop in organic sales and a 2.7% foreign currency headwind. Despite this, Kenvue managed to expand its gross profit margin to 58%, up from 57.6% last year, thanks to supply chain optimizations.
That's impressive. How did they manage to maintain such a strong gross profit margin?
It's largely due to productivity gains from their global supply chain optimization initiatives, which helped offset the volume deleveraging and inflationary pressures they faced.
EPS performance and analyst expectations. Moving on to earnings per share, Kenvue reported an adjusted EPS of 24 cents, beating the analyst forecast of 22 cents. John, what does this tell us about the company's performance?
This is a positive sign. Beating the EPS forecast indicates that Kenvue is managing its costs effectively and finding ways to drive profitability, even in a challenging environment. It shows resilience and operational efficiency.
How significant is this beat in the context of the current market conditions?
Given the macroeconomic challenges, surpassing EPS expectations is a strong indicator of Kenvue's ability to adapt and thrive. It reflects well on their strategic initiatives and cost management efforts.
Operational efficiencies and future outlook. Let's discuss operational efficiencies. Kenvue's operating income margin improved to 14.9%. What contributed to this improvement?
The improvement is due to a decrease in separation-related costs and amortization of intangible assets. However, the adjusted operating income margin did decline to 19.8% from 22.0% last year, mainly due to increased brand investment.
Looking ahead, how is Kenvue positioning itself for the rest of 2025?
Kenvue has updated its outlook to account for incremental tariff costs and currency impacts. They expect net sales to grow by 1% to 3% year over year, with organic sales growth of 2% to 4%. They're also taking steps to mitigate the financial impact of tariffs.
Key takeaways. In summary, Kenvue has shown resilience in Q1 2025 with a strong gross profit margin and an EPS that beat expectations. John, any final thoughts on Kenvue's investment prospects?
Kenvue's ability to maintain profitability amidst sales declines and currency headwinds is commendable. Their strategic focus on cost optimization and brand investment positions them well for future growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Kenvue's performance in the comments below.